Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Friday, July 9th, 2010. This morning we're saying, "Oh, Canada." Sorry, I hate to sing for you there, but that's I love that national anthem. It happens to see it a lot when I go to hockey games. But the reason I say that is because this morning Canada came out with their employment figures, and much like Australia the other day, they blew them out of the water, besting analyst expectations by nearly 5 times. All right, the Canadian economy added 93,000 jobs versus an expectation of 20,000. That caused their unemployment rate to shrink from 8.1% to 7.9%, and showing signs that there's a good economic story going on in Canada. Now, Canada benefits from commodity prices, which have been fluctuating a bit as of late, but are near the higher end of the range. Canada's also been benefiting from the fact that that all that U.S. government spending has helped encourage their exports. Now, of course, the U.S. is Canada's largest trading partner, and if there's a problem in the U.S., if we slow down spending, that could affect Canada going forward. But for right now, things look pretty rosy in Canada. So I just want to take a quick look on the daily chart here. You can see Canada's the best performer this morning. And just got a nice little move going down back towards the bottom of this Bollinger Band here around 101 and a quarter, and it's getting closer to parity, which is the trajectory it was on a little bit earlier this year before we got all this risk in the market. So good story going on in Canada. Strength for Canadian currency today. Looney's doing well. That's what's happening above the border here in the U.S. to the north. All right, and I just want to take a quick look at the euro. Euro's down a little bit lower, but as you can see, the trend has been largely up. Okay, this is sort of a pause day. Now today, we wouldn't really classify today as a risk-taking or risk aversion day. It's a little bit of mild risk aversion, but not much. Basically, ECB President Jean-Claude Trichet came out and he made the obligatory "we're not out of the woods yet" comment. He's saying that there's still questions over the health of the euro banks. We're going to get the bank stress tests in about 2 weeks' time, and that they're going to need to make some serious changes to get the deficits under control. All right. Also, we're seeing on that same continent there, pound weakness. Okay, the pound's a little bit lower this morning as well. Okay, PPI figures came in the UK, and they were lower than expected, and it's showing signs that inflation may be subsiding there in the UK. Now, they had shown in the recent past that inflation targets were outside of the government band, as they call it. There's a little range that they like to keep inflation within, and inflation was outside of that range, so it was higher. So at that point, there was some call for some hawkish comments from people that they may need to do something about rate policy. But they kind of said, well, you know what, we think inflation's going to come back down by the end of the year, so we're still going to maintain a dovish stance. And this number appears to be supporting that decision at this point. So that's what's happening with the pound right now. And lastly, we're seeing some dollar strength this morning. A little bit, I wouldn't say odd, but sort of the focus has been shifted back onto North America a little bit today in light of the Canadian news. Also, we've got a little bit of a flight to safety trade going on. Let's just take a quick look here. We'll look at dollar yen. As you can see, looks like it put in a little bit of a double bottom there at about 87, and it looks like it wants to move a little bit higher. So we're going to see what happens with the dollar. But we've also got a little bit of flight to safety going on. People don't want to sit in some of these risk assets over the weekend, regardless of this week's move, which has shown tremendous gains for some of these risk assets, including the Aussie dollar. We've got earnings season kicking off next week, so that's going to be the big risk in the market now. Can corporate earnings turn it around and show that the economy is moving better? Now, there's a tale of two economies going on. You've got the stock market, U.S. corporations, how they're doing, and then individuals. We talk about unemployment rates and how high they are, and what the real rate of employment is here in the U.S. And corporate earnings are really going to make people either think things are getting better or think things are getting worse. And if we have good corporate earnings, that's going to provide hope that perhaps companies are going to start hiring again, and that's going to help the unemployment rate go down, which is going to get more people employed, which is going to get the economy moving. Now, if these earnings reports are negative, that's going to be a sign that whoa, the employment picture may get worse, and we could be creeping up a little bit further towards this dreaded double dip. So that's going to be the big news for next week. Also, to keep in mind is that regardless of what comes out of the earnings, we still have Washington policy to deal with, and so far they've maintained this anti-business stance. So while the hope may be that better corporate earnings are going to help unemployment, that may not be the case if Washington continues with these anti-business policies. Businesses may say, you know what, we're just content to grow slow like we're doing, and we don't need to hire anybody, and that's it. So a lot of different moving parts going on here. So we're seeing a little bit of strength in the dollar. We've got euro-pound weakness. I just want to show you the Aussie real quick. Just taking a little bit of a pause, but it was on a nice move up on their awesome employment report, and just goes to show that the commodity currencies are still doing pretty well. We've got fears of Chinese slowdown haven't materialized yet, so that could just be a figment, or not a figment, but rather just speculation that that's what's happening. So at the end of the day, it's really going to comes down to here in the U.S. The jobs picture, and the first sign that that's going to get better is going to be corporate earnings. So that's what we're seeing here with this. The other thing we have to worry about is, say we do get through next week's corporate earnings and things look pretty good. Now we've got the European bank stress tests on tap for the following week. So, that could bring risk back in the market. So I expect to see some good volatility here, which, as I mentioned yesterday, volatility is a trader's friend. It's going to provide tons of opportunities to get in and make money if you know what you're doing. So, if you've been thinking about getting involved with the currency market, I highly recommend you take a look. It's very easy to get set up with a demo account. We can do that for you. We also have fabulous, affordable online courses that you could sign up for as well. So that's what we've got. Have a nice weekend, everyone, and good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.